SoFi's next earnings report is quickly approaching, and in less than a month, the company is going to be reporting possibly a big miss for the first time in the last 3 years. And we know that's not typical of SoFi to be reporting a big miss. They usually double beat and they raise. But in this video, I'm going to be explaining my thoughts as we head into Q2 earnings and why I think a miss could potentially be on the cards, more so this upcoming earnings than previous ones. If you couldn't already tell, I'm traveling and I have some bad equipment. I actually didn't even bring my laptop. This video will be completely unedited because I don't have my editing software with me. It's going to be off the cuff. And in fact, I wasn't even planning on recording anything, but I just wanted to hop on and share some quick thoughts, just given where the stock is trading right now. So I just hopped on and I checked SoFi stock and it was down 2%. As of today, it's down 35% year to date, I think like 15% in the past month alone. And the fact of the matter is that Q2 earnings is coming. It's around the corner. It's going to be end of July. I think the date is yet to be announced, if I'm not mistaken. I'm probably guessing that it's going to be somewhere around the last week of July, Monday, July 29th, pre-market would be my guess. But it's going to be announced fairly shortly. If it hasn't been announced already, I've been fairly out of the news loop over the past couple of days. So Q2 really is interesting in my mind because of the last guidance that SoFi gave. SoFi in the last quarter, they raised their guidance for the full year, but they have a fairly weak Q2 guidance. On top of this, there's been not much in terms of news. It's been quite quiet on the announcements front as well. So let's compare and contrast with Q1, right? In Q1, we had a partnerships announcement. We had the NBA, we had more press releases, we had more activity overall. And the stock price action was, in the $7 range, $8 range. Whereas in Q2, just anecdotally, it doesn't feel the same. And yes, you could argue that it's a blackout period ahead of earnings. And the fact of the matter is that this quiet activity has been the case all along for the entirety of the quarter. The stock has also been very, very quiet, right? The volume and the sentiment are all very low. All of the previous gains we had were wiped out. And we know that SoFi stock really moves back on these earnings. It really has a volatile earnings period. If they report good numbers, the stock is generally up, 10 to 20%. If they have bad earnings, even like the one you saw in Q1 where it was not really as expected, the stock fell 10% or so. So really Q2 earnings, given their guidance, can go one of two different ways. Now, I think the first way is for us to have like an explosive double beat and raising the guidance even further, which to be true, they've raised their full year guidance in Q1 as well, but that's going to be towards the back half of the year. It's going to be loaded towards the back half. And historically, a double beat and raise has been true to SoFi's form. And the issue here has been the issue has always been keeping that sustained momentum for the stock after the rallies. They have the breakout, they have a volatile move upwards, but they have difficulty sustaining that move upwards. And really this has proven difficult, and it's led to the stock trading in a channel. And every time it tries to break out, it gets rejected again, making it even more difficult for the next time it's going to break out. I think that the march towards profitability might have been a good catalyst there that could have led to a sustained rally. But at the same time, we've previously hypothesized that the first quarter profitability was going to be the big catalyst that actually has SoFi sustaining in the double-digit range. And that's not necessarily panned out, right? The stock price is in the low $6 range. But here's where I think the stock price doesn't tell a full story, because the business underlying is in a totally different place than where the stock is telegraphing. And if you compare it to just previous years, Wall Street is really taking note, I think, to this, because now that we have several quarters of profitability in the bag, institutional holding is at record highs for SoFi, and it's quickly climbing despite the slump in stock price. And so what you're seeing behind the scenes is that these institutions are loading up on SoFi stock when the stock is in the $6 range or $7 range. Meanwhile, retail is en masse capitulating and saying it's a broken stock and saying they wish they invested in Robinhood or whatever else. And you have this massive dichotomy of what's happening underneath the surface. And I really think the earnings are the spark, the fuse to light that rally, because we get new information on that earnings. So really every new quarter of profitability is a positive for SoFi, right? Every new quarter of profitability brings the company closer and closer to that increased confidence level from a market perspective as a whole. I saw this article, somebody had tagged me in it, And I can't put it up on screen because I don't have editing, but it basically was saying that, SoFi is a bad investment. I think this is Motley Fool or somebody, or Earnings Beat. Basically saying they've taken the year over year numbers, they've taken the gap estimates, which has the huge drawdown in Q3, and they came to the sloppy conclusion that SoFi is this unprofitable, bad company to be owning. And in fact, you could still look at it that way, but a 5-minute analysis gives you much more nuanced view into SoFi because these quarters are getting better every subsequent quarter, right? And the flip side of this, if we turn it the other way around, is if in fact this quarter is the first one where they don't actually hit their estimates. And what I mean by that is that, they don't beat their estimates. Even if they meet their estimates, I think the numbers that the market is expecting have so much success priced into them that even if SoFi meets targets, it's equivalent to them missing targets. And I think that's just something that they themselves have trained the market to expect that from them, right? Because they double beat and raise every single time, and they've been doing it consistently for the past, 3 years. And so now if they come in their first quarter and they actually just meet their estimates, the market's going to take that as a bad sign. In my opinion, that's going to break the stock into the $5 range, and it's going to be tough to climb out of that in the immediate short term. Of course, we have rate cuts coming towards the end of the year. We have a lot of tailwinds with regards to the business. I think one thing to remember is really the thing that I keep coming back to, which is that guidance for the end of the year is still very strong. In fact, they've raised it. The likelihood that they raise it again in Q2 is high. I think they will. And, this could be a definite strategy on SoFi with regards to what they choose to announce from a new product and a plans for expansion point of view, because it seems as though Q2 is a quiet, before the storm, the calm before the storm, whatever that expression is, because really Q2 didn't have a lot of announcements, it didn't have a lot of news, it didn't have a lot of positive momentum, and the fact of the matter is that management could be also delaying that until Q3 to meet the company's elevated guidance estimates, right? They're raising their guidance for the back half of the year. Meanwhile, they're saying it's tough for us to meet our Q2 guidance. We're actually lowering the Q2 guidance. And so that presents a really interesting dynamic because you can imagine this slump in Q2 and then coming back even harder in Q3 and Q4. And on the back of that, there could be some new product offerings, there could be some new promotions, there could be some new partnerships, all kinds of different levers that the company can pull. Even if it is something as small as sales and marketing spend that they allocate, they can do that to make sure that they hit their numbers in Q3 and in Q4. And so this is the thing that really makes me very confident about the back half of the year. And I think in either case, we're gonna see what comes of it, and also what nuggets of information they drop on their Q2 earnings. I think that's going to be really telling because, for example, in the last earnings call, management highlighted their focus on credit cards and they promised innovation towards the back half of the year. I would put the quote up if I could, but if you go through the transcript of the last earnings call, they mentioned that innovation could be expected on credit cards towards the back half of the year. And really what that makes me speculate is Q3 is going to be really strong, even from a big news point of view, from a big product offering point of view. Now, during this earnings call that's going to come up in a couple of weeks, they could drop something telling, for listeners who are looking for hints, who are, like myself, like Tanner, like all of us on the retail side on X, who cover the company more closely than some of these analysts out there. We read between the lines. We're actively looking in their commentary for clues. And I think really management can be dropping some of those hints along the way, similar to how we picked up the credit card innovation in Q1. I've seen a lot of great posts from Tim, from Chris Hager, Data Driven Investing, and from others in the SoFi community speculating as to what the credit card offering could be, what that innovation could look like, what the benefits could look like for that innovation in Q3. And so I think that really we're looking for a pulse on management, where they see the company going in the future quarters. If the numbers are going to be bad, or if they meet expectations, I think the stock is going to be ruthless with regards to how it reacts. If the numbers are good and they double beat and raise, I think it's going to be very table stakes from a market perception point of view. But you got to keep in mind, right? The institutions are loading up. The behind the scenes narrative, I think, is changing. And every quarter we chug towards profitability is a more sustained move upwards. You're not going to see articles like the one we had last week where SoFi is unprofitable, SoFi is, a bad investment, whatever. Because when you look at the trailing 12 months, you're going to see 4 quarters of sustained profitability. You're going to see 4 quarters of revenue growth. You're going to see new product offerings, so on and so forth. And so it's going to tell a much different story than where we are right now in this interim period, where we have some quarters are profitable, and then you look further and then other quarters are not profitable. Either way, those are just some raw thoughts in the moment. I bought SoFi last week. I don't think I'm going to be buying this week just because I'm out of the country and I'm just, wanting to focus on a vacation. But next week I'll probably be back and I'll probably be buying again. As always, I'll be live streaming the earnings event on my channel, so make sure you subscribe and stay tuned for updates. I'm curious to hear what your thoughts are in the comments. Let me know how this completely unfiltered, unedited video went. I'm quite awkward, I would say, when I don't have the tools of the editing software. And I apologize for the equipment being a little bit lackluster this time around. Thanks for watching, and I will see you in the next one.